Welcome back to the final round. Time for your retail roundup. It has been a big week for retail. We have learned a lot from the likes of Target and Home Depot. I want to bring in Jerome Martis. She is with Refinitiv, the Director of Consumer Research there. Jerome, you live and breathe this. So I want to know, when you're looking back on this week, was there anything that came out that you think that surprised you one way or another that really caught your attention?
I think it was a very impressive week in terms of the numbers. The bulk of retailers smashed expectations, but there was one key metric that really stood out, and that was from Target. They said that they gained 5 million in market share during the second quarter, and that market share came from the department stores and the apparel stores. And this is impressive because when you look at those two sectors, those are the two that are expected to be the most negative for the year 2020. Still, having said that, Target saw a growth in apparel in sales for the second quarter, which is telling us that the consumer definitely felt more comfortable spending the discretionary income. And this is mainly, they spend it on apparel. However, having said that, the retailers told us that the reason consumers spend is because they had those stimulus checks in their pockets. The latest reading on the Refinitiv Consumer Confidence tells us consumers are very much concerned about their future employment. And if they don't get those checks in their pockets, they're not going to spend as freely. In fact, we might see what we saw in the first quarter. They might put their hands in their pockets and hold back on spending.
So let's say that happens and they do that. Does Target still get to keep that market share? Do you think that's here to stay, that they have made inroads enough that they're going to be able to, and maybe even with consumers aren't spending as much, will they continue to get gains? Is there any insight into that?
Absolutely. E-commerce, no matter what, is here to stay. Target already telling us that the strength that they saw moving from the first quarter into the second is already even moving forward into the third quarter. And the retailers in Asia on the other side that are already seeing mall traffic coming back into the stores, they're telling us that regardless of stronger mall traffic, consumers are still gravitating online to finalize these purchases. Then there's also the fact that because of the pandemic, a lot of people were at home and were forced to go online and shop online, especially the older generation, which for a very long time have been holding back on putting in their credit cards online. Now they've learned to rely on this service and they're becoming loyal customers because they can see, they're experiencing it for themselves, that they can rely on the service to do what it's supposed to deliver safely the products to their homes. And this is now going to translate into customer loyalty. We've seen it before also in previous economic depressions or in economic downturns, that if a company learns to rely on a particular company, then it translates into customer loyalty going forward.
So going forward, looks like maybe Q3 could be a little rougher as people maybe prepare to spend money again around the holidays. What's happening with bankruptcies, though, in retail? We had a slew of those earlier in the summer. Should we be prepared for more of those to cross here, or have we flushed out enough names?
We have not flushed out enough names just yet. In fact, when you look at the forecast for the remainder of the year, the third quarter is expected to be worse, and then we are supposed to see an uptick in the fourth quarter. But earnings are still expected to be negative, and they really don't get into the positive territory until the first quarter of 2021. That's the forecast as of right now. So what the coronavirus has been doing really is speeding up the process for a lot of the weak performing retailers. The mall traffic was already bad, especially the department stores had been suffering. And so they have just been, pushing for the inevitable to happen even faster.
Hey, Jerome, what are some of the names that you think are most at risk? Some of the names that we could see file for bankruptcy over the next several months?
Well, for sure, the department stores, the stores that were in the mall, a lot of the apparel stores, it really comes down when you look at the sustainability for the companies is who really has a really good balance sheets. And those are companies like Nike and Lululemon that, have a lot of cash, very little debt, and have a very strong omni-channel presence and a very strong customer base, a loyal customer base that are expected to follow them. When you look at even at companies that are reporting next week, expect positive surprises from Dick's Sporting Goods. Currently, their estimate is $1.10, but we have a very accurate 5-star analyst that is giving it a bold estimate and thinks that Dick's Sporting Goods earnings could be as high as $2.23. That's over $1 over the earnings. And analysts don't usually stick out their neck like that. So it's telling us that you can expect positive surprises still from some other retailers. So consumers are spending money. They're just spending money at some of those nesting teams, and health and wellness is a top priority for them. So Lululemon, Nike, Dick's Sporting Goods, Hibbett Sported Goods, they're also expected to do well coming up in the next couple of weeks.
Hey, Jerome, when you say the department stores, right down the street from me in New York, there's a Bloomingdale's, which hasn't paid its rent. And now the person that owns the building is suing them. They haven't been paying their rent. Are we looking at a big name department store like a Macy's? I mean, is that the kind of name we should be on the lookout for?
Absolutely. When you look at the department stores, Macy's, Saks, Lord & Taylor, all of them, Nordstrom's, the combined credit model that we have for Starmine was already in the bottom decile, and that has only deteriorated even more going into 2020, suggesting that those names, the ones that you mentioned, and the department stores, just about every single one of them are the most at risk and for that financial distress.
All right, Jerome Martis, our Refinitiv Director of Consumer Research. Fantastic to see you. Have a good weekend.
Thank you for having me. Have a nice weekend.